Hello everyone, myself Dr. S Mohammed Nazeer, Assistant Professor, PG and Research Department of Economics, the New College, Raipeta, Chennai 14. Now I am going to teach you Introduction to Economics. What is economics? Economics is a subject which explains how to earn money and how to spend that money. How to earn money and how to spend that money in a better ways. Before that, what is economic activity? See, we are a human being. We need food, cloth, shelter. This is the basic necessities of the human being. Food, cloth, shelter. So, if we want to buy food or cloth or shelter, we need money. So, we have to work. So, let's see example. In an economy, there are two sectors. Household sector, firm sector. So, we are household. We are having land, labor, capital, organization. These four are called factors of production. Land, labor, capital, organization. So we are having these four factors. We are giving these four factors to the firm. Firm are using these factors and producing goods and services. For that, firm is giving rent to land, wage to labor, interest to capital, profit to organization. So the household is earn the income. What is the reason the household is earn the income? For spending that income to buy the food, cloth, shelter. So the household sector spend that income to the firm, buying goods and services. So they are spend that money to the firm. Now the firm received money. For that, the firm gives to food, cloth, shelter, that is goods and services to the household sectors. Now the household sectors consumed these goods and services, and again they are working and they are earning the money, and again they are spending that money. So here the household is earning the money for giving their services to the firm, land, labor, capital, organization. For that, firm is giving revenue to rent, wage, interest, capital, interest and profit to the household. The household is earn the money, spend that money. Here the firm, in the name of selling goods and services, the firm is earn the money. And for giving rent, wage, interest, capital, interest and profit to household, the firm is spend that money. So here the firm is also earn the money, spend the money. The household is also earn the money, spend that money. This activity is called economic activity. Now the government enter into that section in that economy. So there are household, firm and government. This is called three sector economy. So government is also earn the money, spend the money. So government income is nothing but getting tax from the consumer, household, the name of income tax. Again, the government is getting income tax from the firm in the name of corporate tax. So the government earn the income. The government is spend that income providing infrastructure or welfare to household and the firm. So here the government is also earn the money, spend that money. The household is also earn the money, spend that money. The firm is also earning the money, spend that money. So these activities are called economic activity. Simply we can say economics is the subject which teaches how to earn money, how to spend that money. So if you want to understand the proper meaning of economics, we have to go through the four important definitions of economics. There are four important definitions. Wealth definition. This definition was given by Adam Smith. Welfare definition This definition was given by Alfred Marshall. Scarcity definition, this definition was given by Reinald Robbins. The fourth one is the growth definition. This definition was given by Samuelson. Among the four definitions, the scarcity definition is widely accepted definition. According to Lionel Robbins, economics is a science which deals with studies human behavior as a relationship between ends and square means which have alternative uses. What is the meaning of this definition? So economics is a science which deals with human behavior as a relationship between ends. Here, ends means wants. So, the human behavior, the human wants are very high. In order to satisfy these wants, we need resources. That resources are scarcity resources. They're scarce means. So, ends, wants, scarce means scarcity resources. That scarcity resources have alternative uses. So, economics help us to satisfy our wants with the help of that scarcity resources. So simply we can say economics is a science of choice. Before 1933, there is only one economics. That is economics or political economy. After 1933, Ragnar Frisch coined the words micro and macro, denote the two branches of economic theory, namely microeconomics and macroeconomics. Microeconomics. It is a study of behavior of individual decision making such as consumer, firms, etc. I repeat, microeconomics is the study of behavior of individual decision making units such as consumers and firms. So there are two sections, consumer and firm. Consumer have objectives. Consumer objective is maximize his satisfaction with the help of minimum expenditure. The firm objectives is maximize the profit with the help of minimize the cost or loss. So this is the objective of firm. So the consumer has objectives, the firm is also have objectives. In order to achieve these objectives, economic theories help us to achieve these objectives to both consumer and firms. I will explain you later about that. Microeconomics, the subject matter of economics, I told that micro and macro. Microeconomics deals with product pricing, factor pricing, welfare economics, three branches. Under product pricing, theory of demand, theory of supply. Under factor pricing, wages, rent, interest, profit. So this is the section of the microeconomics. Macroeconomic sections, theory of income and employment, theory of general price level and inflation, theory of economic growth, theory of distribution. So these four all comes under macroeconomics. Okay, what is microeconomics? Microeconomics is defined as the study of behavior of individual decision-making units such as consumer, resource owners, and firms. It is also known as price theories. Microeconomics has both theoretical and practical importance. It solves the three central problems of an economy: what to produce, how to produce, for whom to produce. So microeconomics solve these central problems of economics. So macroeconomics. What is macroeconomics? Macroeconomics is the study of overall economic phenomenon like employment, national income, etc. Again, macroeconomics is defined as the study of overall economic phenomenon such as problem of full employment, gross national product, savings, investment, aggregate consumption, aggregate investment, economic growth, etc. The study of macroeconomics is used to solve many problems of an economy like monetary problems, economic fluctuations, general unemployment, inflation, disequilibrium in balance of payment positions. Okay, now I will explain you the central problem of an economy. The causes for central problem of an economy. There are three causes. Number one, unlimited human wants. Unlimited human wants, limited economic resources, alternative uses of resources. These three are the causes for the economic problems. Now, what is economic problems? What to produce? How to produce? For whom to produce? These three are the major problems of an economy. Due to limited resources, every economy has to decide what to produce and in what quantities. If the means were unlimited, then according to Friedman, it would lead to a stage of salvation. But the means are limited and the economy must decide the efficient allocation of scarce resources so that both output and output mix are optimum. An economy has to make a choice of the wants which are important for the economy as a whole. For example, if the economy decides to produce more cloth, it is bound to reduce the production of food. The reason is that resources used to produce food and cloth are limited and given. An economy cannot produce more of food and cloth. Thus, an economy has to decide what goods it would produce on the basis of availability of technology, cost of production, cost of supplying, and demand for the commodity. The problem of how much to produce is the problem of determining the quantity of each goods to be produced. In economics, the problem of what to produce is studied under the price theory. I am explaining you. The first problem is what to produce. See, we have a limited resources. With the help of that limited resources, we have to produce either food or cloth. We cannot produce both food and cloth. So, if we produce food, we have to sacrifice cloth. If we want to produce cloth, we have to sacrifice food. So, what to produce is the main problem of an economy. With the help of the price theory in microeconomics, all the theories help us to teach us what to produce in an economy. Then only we can achieve the consumer objectives as well as the firm objective. Consumer objective is nothing but maximize the satisfaction with the help of the minimum expenditure. The firm objective is nothing but maximize the profit or minimize the cost or loss. So, with the help of the price theory, we can achieve this. How to produce? There are two types of production technology. One is capital intensive technology, another one is the labor intensive technology. What is capital intensive technology? The ratio of labor and capital. If more capital, less labor, the technology is called capital intensive technology. What is labor intensive technology? There is a combination of labor and capital. More labor and less capital is called labor intensive technology. So in an economy, we have to choose which technology we want to apply. So theory of production in economics, the theory of production help us to solve this problem. The third problem is for whom to produce. This is a question of how to distribute the product among the various sections of the society. National product, that is the national income, is the total output generated by the firms. The total output ultimately flows to the households in the form of income, their wages, rent, profit, and interest. There are millions of people in the society. Each one cannot get sufficient income to satisfy all his wants. This raises the problems of distribution of national product among different households. In economics, the problem of distribution of national product is studied under the theory of distribution. So again, the central problem of economy is for whom to produce. This problem is addressed by this theory of distribution. These theories help us to solve this problem. Then automatically consumer gets more satisfaction, the firm gets more profit. So the economics simply teaches how to earn money, how to spend that money. Okay, this is the economics meaning. In our next class, I will teach you microeconomics. Thank you.